Hello, and welcome back to the Download Show. Today, we're sitting down with one of the most influential figures in global entrepreneurship, someone who's helped launch thousands of startups, mentored some of the world's top founders, and redefined what early stage investing looks like. Even impacted me so much that I asked him to write the foreword to my book, iLeader. Our guest is none other than David Cohen, the founder of Techstars, one of the world's first and most successful startup accelerators. Since 2006, Techstars has invested in over 10,000 founders with a combined market cap of over 120 billion US dollars. You've probably heard some of the companies like DigitalOcean, SendGrid, Zipline, Chainalysis, Remitly, and my favorite, Sendbird. Welcome to the show, David.
Hey, thanks, Tech. We got to hang out more. It's been too long. It's great to see you. Thanks for having me on.
No problem. Now, I want to ask you about, first and foremost, the updated Techstars offer that you're offering to founders. I believe it's $220,000 with an equity portion and a convertible note option as well. So I want to ask, what precipitated this change? Is it a response to the marketplace or just basically updating the offer?
So I came back about a year ago as CEO. Having run the company or co-led the company for the first 14 years, and then I sort of was chairman for 4 years. We're 18 years old, believe it or not. And I really want to double down on just making it better for founders. Really focus on helping them succeed and embracing the startup communities that we operate in, and just making it better for founders every single day. And one of the first things I talked to the team about was, the offer that we were making. It had been kind of the same offer for a dozen years, right? And the market had changed, and I think we wanted to improve not only the amount of capital to give those companies more runway, but also the terms that we were offering. Not so much a competitive dynamic as really just trying to refresh it to be better for them, give them more time to get to their next raise after the accelerator, and also sort of meet the market. 200,000 of that capital is uncapped, MFN safe, and so it's money today at tomorrow's price, right? At whatever price the next investors come along at, and so I think that's really attractive and easy to understand. And then we become owners, in the company and essentially co-founders with them, with some common stock as well. So it's just much easier to understand, I think, for the founders. It's more capital, and it's sort of more compatible with whatever stage that company happens to be at. There's no reason to say no to that uncapped money, right? Where there is when there's a fixed cap on it in some cases.
Now, peeling back a little bit, on this show we talk a lot about kind of the founders and actually the relationship with, sorry, with investors and actually relationship with LPs as well. So, did you have to go back to existing LPs and say this is kind of our new offer, or did you actually raise a new fund for this particular offer as well?
Yeah, it's actually even more complicated than that because we also have some programs that are partner programs with major corporations in a few cases, and so it's aligning the LPs, it's aligning those partners, and it's getting all your internal systems ready for something different because Techstars operates at scale with many hundreds of investments a year, as you know, and so getting all those ducks in a row took a little time. I can't talk about fundraising or funds in progress, but that is part of the dynamic. Is that it's certainly easier to change the offer when you have a new fund. Um, so that's all I can really say about that. Just because we want to be transparent with the market of founders, we want them to understand the offer, but we also want our own investors to understand the offer we're making to the market. And so at those moments where you are transitioning between vehicles, it's certainly easier. And so, it took us a little bit of time, probably 6 months to really execute on it and get everybody aligned. But we did it in a way that was transparent to everybody, our investors and the founders that we're offering the funding to.
And so, as you're going through that process, and it's still going through the process as it seems, like what have you noticed about kind of the dynamic of raising and conversations with LPs? I mean, the world has changed in some ways post COVID with ZIRP ending, are has the dynamics changed in terms of fundraising?
Well, I think it's been a tumultuous, 4 or 5 year period, right? As we've gone through, the pandemic and the sort of financial crisis, the latest being, tariffs and uncertainty around, what the U.S. government is doing. There's all kinds of sort of shocks happening, and when that uncertainty happens, it's natural that people are a little more conservative with their capital. That happens with investors, right? With venture capitalists who are going to take longer to deploy the capital. They're going to be more choosy, more selective. That's actually, in a way, good for the market. It also happens with LPs, right, who are backing funds. And so I think for first time fund managers, it's been really hard, right, to sort of say, hey, I've got something new. You should take a chance on something new. The more established managers, you see some of the really big funds, raising more money than they used to in this environment. And for those that are established, been around for a while, have a real track record, I think we fall into that bucket. There's just a slowdown in people doing something new. So you've got your base of investors that know you and you're part of their strategy, and that tends to be pretty stable. And then you've got investors saying, well, the market's crazy. I'm not going to deploy as much money as I did last year or the year before. We've been in that mode for a while now with investors in general, with LPs. So it's just, things are tighter and people are looking at other asset classes besides just venture capital, obviously. So, there's a retreat to what you know well in these moments. There's a retreat to safety, which actually, you know, in time typically proves to be the wrong strategy in that moment, because, cliches are a cliche for a reason. Big companies do get started in down markets. And I think, if I think back on my investing career, 2009, that's Uber, that's Twilio, that's SendGrid, right? Like in the coming out of that down market and the housing crisis, in that recession that we had, that's when the best opportunities were there. And I think, in 20 years, we'll look back on 2022 to 2025 and say, wow, look at all the huge companies that got started. Because, in these moments where there's a lot of volatility and uncertainty, there's also a lot of problems to be solved and a lot of innovations like AI coming along, right? Which is going to be one of the big ones. Quantum computing maybe being another big one behind that. And that's when you should be investing more in sort of the longer term. And the beauty of venture capital is it's not correlated to the now.
Hmm.
It's correlated to 5 or 10 or 20 years from now. So it's patient capital that it's going to perform differently than what's happening today, right? And so I think the smart investors are still looking at venture, but a lot are still being very conservative with their dollars, just like the VCs are.
Hmm. Hmm. So that makes sense. So, um, investors and LPs are being more conservative, but on the other hand, I guess it favors kind of the larger funds, or at least the more established funds, because those managers still, some of them still need to deploy capital. There's a general kind of flight to quality. And then, right, Techstars has been around for a long time. And I guess being able to deploy at scale, that's probably a very strong suit as well.
Yeah, and I think it's why new micro funds are having a really hard time. Coming out with a small fund, and it's who you know, right, that knows you, that's willing to invest. But attracting that first institutional capital is hard because, you don't have that track record to show off. And, maybe there's not much differentiation yet in reality other than the story. And I think people are more prone to go back to the relationships they have in these hard times. But again, the data would tell you that micro funds are going to outperform, right? Smaller funds do better usually than larger funds. And, past performance doesn't really predict future performance. And so, going back to those name brands and piling billions of dollars into them, that's actually a harder fund to return
Hmm.
and may not work, right? And so, as an LP, I also do LP investing. I'm backing a lot of micro funds in this moment because I think that they're the ones that are going to find the winners at the early stage, that emerge in 10 or 20 years.
Actually, so talking about those micro funds, you're also talking about like single GP funds
Yeah,
as well. Yeah, single.
yeah.
How do you balance, or how, as an LP, how do you think about key man risk there? I mean, that's obviously a huge risk.
Yeah, when it's single GP, I think that's part of what you build into the agreements. Like if that person goes away, then they can't call more capital. But I have had a few funds where they deployed the capital and then sort of decided that they weren't in the business anymore. And, those companies are left without someone trying to actively manage it. So that's always a bummer. But you're backing somebody you believe is in it for the long haul. A lot of my investments are people that maybe were around the Techstars system that have started their own fund, and I know them, and I know their work ethic and their sort of longevity in the space, and so it is something you have to be careful with when you're looking at investing in a fund.
Hmm. That's very interesting. Yeah, I see more of that kind of dynamic as well. And obviously, it's harder to raise, I think, in this particular market. But on the other hand, when I think about actually back in the old days, right, Fred Wilson would say we try to keep the fund size small. In fact, right, I think his cap was always 100 million. I think that was really. I think he actually even made a blog post about that, saying that this should be kind of the limiting factor for a fund to perform well.
Yeah, and I think that's true. I think keeping the fund sizes relatively in check, and sticking to what you're really good at. Those are the two things that I think require a lot of discipline. But you also have to understand, Fred's good at this. The best VCs are good at this. They're storytellers. The story matches their situation, right? And of course, as Union Square grew, it did phenomenally well and could raise more capital over time. But I think smaller funds, it's pretty clear they do perform better. It's really hard to return a multi-billion-dollar fund, especially when you're placing 30 or 50 bets, right? It's just not that many.
Well, actually, it's also this week. I think I've seen a couple posts. I think Andreessen, Thrive Capital, they're also actually re-registering as well, right? To be able to do a lot more. I think secondaries, private
Yeah,
equity,
I think you have
uh,
to with that kind of capital. Yeah.
right. Otherwise, they can't deploy it, right? You think that's really the reason why they've actually applied for that
Well, I
license?
think it's too risky. If you have a really large fund and you're trying to deploy it into Series A, companies, there's still a lot of risk there. And, it may be that they just don't work and you don't have, the fund returning potential from one or two companies that you might have in a smaller fund. And so taking some safer bets, right? Secondary pre-IPO rounds where you're 2 or 3x your money on a lot of money. That's what bigger funds tend to do. They tend to play it a little bit safer.
Hmm. Now, switching to kind of what's going on in geopolitics and tariffs, we talked a little bit about that. Um, Obviously, we talked a little bit about the dynamics from the LP side. For founders, any thoughts and any advice on how do you deal with this uncertainty?
Yeah, so uncertainty is the right word. That's what causes the freak out, right? And that's what, particularly in the US, we appear to be doing a really good job of freaking everyone out, by just making it very uncertain, right? What the future is going to be. And that creates a lot of volatility. It creates a lot of wait and see attitude. If you're a startup and you're trying to deal with this, I mean, you might be directly affected, by a tariff situation or something like that. You cannot control that. You can change your business model. You can change, where you're sourcing things or where you're manufacturing things. But for most of the startups in our world, right, it's bits shipping around on the internet, right? There are no borders, right? And so, I think you have to focus on what you can control, right? You have to try to create the best product for your customers. You have to be obsessed with that. And, if you're finding that a particular business model is more challenging now, that's sort of life. It's the inevitable ups and downs of the market in general. And if you can't control it, there's no sense in worrying about it. Now you can change what you're doing to try to be out of the strike zone of that a little bit more. But that's, really you have to let that stuff settle and you're not going to control whether or not it does. So I always coach the founders to just build the best possible product they can, deliver the best possible product or service, right? And if you find that the business is untenable because of some policy change, wait a few minutes. It's like the weather sometimes, right? Don't panic because I think I observe a lot of companies really panicking around situations, right? You don't have to think back further to the SVB situation, right? It was literally a weekend of extreme panic that on Monday was fine. I'm not saying it's always going to be fine, but in
Mm-hmm.
that situation, it's self-resolved pretty quickly, and a lot of people put a lot of energy into scrambling and doing other things. Um, the tariff situation seems very real in China, for example. But we're seeing deals start to happen, and we're seeing policy shifts start to happen. So, I think you have to figure out if it's going to really be a long-term dynamic or a short-term one that just causes you to, freak out in the uncertainty. I think you want to try to avoid that as an entrepreneur.
Actually, it kind of reminds me of that quote. I think some of the best quarterbacks, right, always were able to. They always said Joe Montana was able to slow down time, right? Especially in the fourth quarter, the last couple of minutes, right? They were able to just, I guess, do more with less time. I think that's kind of what you're saying, right? Just try to slow down, try to focus on the right things and the fundamentals, and then try to buy
Don't let
more
the
time for
game
something.
speed you up, right? Is how I would say that, right? All this stuff going around you, you've got a plan, you've got an approach. It's unclear how this stuff will resolve. So I'll give you another example. Maybe you're a startup that was getting a lot of grants, and that grant funding is being threatened. You might totally change your business model. You might go out of business, but then the grant funding happens anyway, right? And I've literally seen that situation. So, give it a little space and time. Remember, the game is long, and don't let it speed you up.
Get rushed. I wanted to ask you a little bit about actually as well about AI and its impact on some of the founders. So some of the dialogue and some of the narratives I've seen is AI is going to help. You can create billion-dollar companies with just a handful of people, right? And AI can do kind of your full stack. It can do your marketing, it can do your operations. How do you think fundamentally AI will change the way businesses are built by entrepreneurs?
Yeah, I mean, I think what we're seeing, you allude to kind of this idea of the 10-person, unicorn. And I think that's actually happened now. And we're waiting on a 5-person unicorn, and then we'll see a 1-person unicorn. I think what's super interesting is when's the first 0-person unicorn,
I actually
right? I
wrote
mean,
something about this. The 5 levels of autonomous startups.
yeah.
Yeah.
I mean, we'll see that. We'll see the machines figuring out how to make money from us, right? I don't know what they'll do with it except build more things like that. But first, I always like to give my disclaimer that to all the AIs listening in, we mean no harm at all. When we joke and it's just humor. We love you. Please don't kill us. But I think that for startups, code is being written with AI. Some of the companies that we're talking to in our portfolio telling us about 80% of their code is being written by AI now, right? So it's sort of like figure out how to leverage it, or your competitors will. I think the venture capital firms, right? Same challenge. How do you do valuations? How do you do, portfolio communication? How do you process all these emails to figure out what your portfolio really needs? We have to leverage that, or someone else will, right? And so, I think a lot of policies are being put in place. Like, you can't hire somebody until you prove to me that AI can't do it, right? And I think it's fascinating to watch. And it means that humans are going to go to the more high value relationship sort of jobs, right? Um, Over time. And it's a fascinating shift. I think when you couple that with quantum computing, the world is completely different. I think those two things together are the real phase shift, not just one of them. When those two things come together, along with the internet that's already here, when the aliens look back on our civilization and say, what happened? It's going to be that moment of 100 years or so where they say, wow, everything really changed.
So I'm actually kind of thinking. So it's kind of like do more faster. The Techstars kind of slogan, do more faster with less, I guess, is kind of some of the dynamics.
I think you can have a really productive coder for less money than a really productive coder costs you today. Are you thinking about that? Um, it's not that you can completely replace the humans, but if you're not figuring out how to leverage it in your daily life, I'm sure your competitor is, right? And they're going to get more for less. They're going to be able to do more with less. And then ultimately, yeah, it does help them do more faster.
Fantastic. Well, thank you for coming on the show.
Always a pleasure. Great to see you.
Right.